Corporate tax wishlist. Corporate tax collections have been strong in the last few years, and perhaps this is a good time to examine what's working and not when it comes to taxation, both administratively and otherwise. There are some clear expectations, for instance, for lower tax on new manufacturing units, as we've discussed here, and some clamor for lower corporate tax rates overall. But the larger focus appears to be administrative and to do with really making it simpler for companies to deal with the tax department and thus invest more. I reached out to Ian Dwaraknath, partner of Price Waterhouse Co LLP, and began by asking him how the last year was in tax collections and trends, and what he was looking out for from the union budget to be showcased or presented later this week.
Anyone would tell you that the broad tax trends have been extremely positive, not only in the last year, but in the last few years. There has been a fair amount of buoyancy in tax collections. Growth has been robust, and that's obviously also backed by the fact that economically we've been doing extremely well. Our GDP has grown, and that is obviously reflected within our tax collections. The overall share of corporate taxes has also been growing, which is a positive thing. On its part, I think the government has been, of course, increasing the amount of scrutiny on taxpayers and corporate taxpayers. Nothing wrong with that. With increased growth comes the responsibility to pay additional taxes. There has been a greater focus with regard to things like assessments, like high-pitched assessments, a lot of transfer pricing appeals and assessments which have come up, a lot of litigation on foreign companies on aspects such as permanent establishments, and of course, some invasive procedures such as search and survey proceedings, which continue. So I think overall, extremely buoyant collections on the back of a strong economic growth and good performance by Indian companies.
Dwarak, any trends within that in the terms of what's been more secular and what could have been more, let's say, in the nature of bumps?
If you look at it industry-wise, I think there's been a spurt in manufacturing, again, which is to be expected. There's a lot more to go still, but there has been a spurt in manufacturing, and therefore the kind of assessments which have been taking place for manufacturing companies. There have been continued questions with regard to amounts which are leaving the country. So payments made by a lot of manufacturing companies, such as for management fees, for royalties, anything that goes to reduce their profits, anything which is paid outside the country, are being questioned a lot more. And that's also only natural, because I think the government's thinking is, hey guys, if you've been manufacturing in India for a period of time, that we would expect you to be more self-sufficient, and we would expect these kind of payments to reduce over time. So I think there has been a significant spike in the kind of assessments which have been carried out for those kind of companies. There's been a huge spike in terms of international tax. So the number of foreign companies which have been receiving tax notices, the kind of issues which have been coming up specifically with regard to things like permanent establishment have been immense. A lot of adjustments being made on that count. Finally, on the not so good side, I think the move to faceless assessments has not been without some challenges. I think the amount of information which is being sought by the government is immense. It's extremely voluminous. So I think if they're able to taper that down to be more specific in terms of the asks of companies, it'll just ensure that A, companies don't waste their time providing a whole lot of irrelevant information, and B, the government also targets its focus to something which is relevant and which perhaps can generate greater revenue for them.
You've raised about 3 or 4, I think, broadly the administrative approach issues when it comes to tax collections. Is there anything specific that is on top of the mind, either a clause, something that's old or new? We also have a new direct tax code imminent. How much of it will actually emerge in a week's time, we don't know. But anything there?
Yeah, you took the words out of my mouth. So I think there is, of course, the hope that there will be a new direct tax law, which will come in. At least that's what the finance minister announced 6 months back. But since that point in time, I think there have been around 22 subcommittees that the government has formed to look into the simplification of the tax law and come out with new provisions. They put it out, they requested for public consultation in the beginning of October, and I believe more than 6,500 suggestions have been received. We still do not know if they're going to come out with a new tax law altogether as part of this budget, or whether they're just going to tinker with the existing law as it is and then propose a new finance bill before the budget session closes. So I'm betting on the second at this point in time, maybe a little bit of tinkering this point just in the budget, but thereafter a new finance bill hopefully comes out maybe before Parliament closes or the budget session. In terms of provisions itself, I think 3 or 4 asks, right? One, just simplify the language. It is extremely, extremely complicated. So just simplify it. Second, remove provisions which are redundant. And this law was written in 1961. The world has changed. Businesses have changed. Business models have changed. Remove stuff which is not relevant anymore.
What's an example of that?
I think a lot of the provisions with regard to taxation of specific kinds of companies is something which is just redundant. I mean, if you look at the provisions which were introduced for taxation of royalties over a period of time, I mean, those kind of provisions don't exist anymore. So make it more current to what is happening in the world today, which would be my third ask, right? Bring in legislation which is relevant to the kind of businesses and the business models that exist today. For example, if you say that you want to invest, or the government wants to invest heavily in infrastructure, that will necessarily require, and historically we've seen it, a large presence of foreign personnel in India for a substantial period of time. Now that creates something called a permanent establishment. So can the government come up with some sort of provisions that ease the presence of foreign technicians in India over a substantial period of time? Will we come up with some suggestions with regulations for Pillar 2, which the whole world has been talking about? And today that one is tricky because
Thanks to Trump.
Thanks to Donald Trump, exactly. And I think the US Secretary of Treasury, or his pick for Treasury, has gone out on a limb and he said any country that introduces Pillar 2 regulations better watch out. So again, is India going to bow to that pressure, or are we going to go ahead and say, no, this is a commitment and we're going to go ahead and do it? The taxation of online companies and a lot of online businesses, things like the significant economic presence, which was introduced 3 or 4 years back, need simplification, they need clarifications. So I think making the tax law more relevant to the kind of industries space and a sector which has immense potential for the country we want to invest in. Are we going to come up with something for that? Are we going to do something on green energy? 2070 is the target we've given ourselves to be carbon neutral. But to get there has to be substantial incentivization of businesses to go carbon neutral over the next 5 to 7 years. Of course, taper it off. Nobody is saying you need to continue with tax breaks forever, but this is the time to do it. So I think these are some of the things, Govind, that I think the government should be looking at.
Right, Dwarak, thank you so much for joining me and speaking with me.
Thanks, Govind. Pleasure as always.